Sorry to interrupt your breakfast, but we're HighGold Mining, and thank you all for coming out so early this morning. The more awake of you will notice that I am not Darwin Green, but I thought I would give him a little bit of an introduction. I'm Naomi Nemeth. I do the investor relations for HighGold Mining. I've been here since the start, as has Darwin. We started about 3 years ago, and we are in Alaska and Timmins. So Darwin Green is the CEO, present CEO of HighGold Mining, has a kind of rare combination of technical skill. He's a geologist with a master's degree, has a lot of experience in Alaska, as well as in the type of deposit that we have up there. So he also has market savvy, which you don't find in every CEO, so we've come to learn if we go to these presentations. But Darwin has done very well raising money for HighGold Mining, has a good relationship with the investors, both institutional and retail. We're very approachable, and he can also regale you with the details of the geologic origin of our presentation, or of our properties. So if you want to ask him later for that, that's great, because that usually takes a long time. We've only got half an hour this morning. Anyway, I'll turn it over to Darwin, and he can give you some details on Johnson Tract and our Timmins projects.
I'm not used to such nice introductions. Thank you so much, Naomi. And thanks for everyone coming out this morning to our breakfast here. Today I put together a presentation that's a little bit different. Kind of at the front end, I kind of did a little bit of a background on investing in junior mining companies. I know not everyone at this conference is a pro, hasn't been doing it for 20 years, so I kind of thought I'd start with a little bit of a soft start into the mining space, the junior mining space in particular, and why I think we're a good option for you if you're considering investing in mining stocks. And I'm going to go with the assumption here that most of you believe in gold if you're going to be sitting at this presentation. There's a lot of great presenters at this show talking about the positive outlook for gold, medium long term, and I certainly share that conviction. May make some forward-looking statements. So just, really high level stuff here. If you like gold and you want to invest in gold, there's two kind of broad ways you can do it. You can invest in physical gold or ETFs, but that's really about preserving your wealth. That's about maintaining the money you have. An ounce of gold in the 1920s, 100 years ago, could buy you a pretty nice suit, and an ounce of gold today can buy you a pretty nice suit. It basically retains its buying power. I would say dollars don't do quite the same thing. But if you really want to create wealth, that's where your exposure to gold miners and gold explorers comes in, and that's what I'm going to talk about today. In my view, your greatest leverage to a rising gold price is really in investing in the companies that are looking for and developing the next generation of gold mines. With that in mind, there's really kind of a risk-reward ratio. So you really got to know what you're comfortable with. If you don't have much appetite for risk, i.e. losing your money, you might want to invest in the producers and the royalty companies. They'll pay dividends. If gold goes up 25%, they're likely to go up 50%. So there's still leverage to gold. They're a great way to get exposure. But ultimately, they're not going to give you that 5, 10, 100 bagger type win. Next, with a little bit more risk are guys that actually have assets. They've got a deposit defined. Some of those deposits are right there. They're waiting on permitting and feasibility. They're ready to go ahead. They just need financing. Some of those deposits have just been defined, and there's been no economic studies on them. But that falls into the broad category of developers where there's actually an asset there. The key way to distinguish these guys is it a high-quality asset? And that'll be a theme I walk through as we go through this presentation. And then the kind of most exciting, the most torquey part of the space is the raw explorers. Getting into the guys that are making brand new discoveries. We're a Great Bear, for many of you that have been in the space, that was the big success over the last 2 years. A 30-cent stock that 3 years later sold for $35. That's a 100-time multiple on your investment. But for every one of those, there's many more that don't succeed, so it comes with a lot of risk. So from my perspective, personally, where I like to invest is where you can kind of balance both. You get the best of both worlds. You find a company that has an asset that's a quality asset that backstops your investment, but still has a lot of that exposure to the exploration and to the discovery, the real fun part of the business. Now, when you're going and looking at these companies, how do you discriminate one from another? There's 1,000+ junior mining companies out there, and you know, this is pretty high-level stuff, but it's pretty common sense stuff too. I mean, you want to focus on great management teams. Look for guys that have done it before and know what they're doing. Guys with high-quality projects and gals. You know, companies with the real quality assets. In the right jurisdictions, because ultimately finding ore deposits is hard work. It's very labor-intensive. It's very, you know, capital-intensive. So if you're going to go look for something, you might as well focus on the best of the best, and that means the kind of high-grade deposits that the senior producers want, located in jurisdictions that they want to be in, and then generally you get paid the highest premium when the takeover comes. And like any investment, you want to find good value, and you know, I'd say almost you probably can't find a company on the floor here today that isn't going to be good value. You know, we're in a place right now where there's tremendous value out there. It's a great time to be investing in the space. Key in this market, though, is making sure those companies have money to survive, and not just survive, to thrive, to actually advance their assets, so they're right at the front of the line when markets do come around. So, you know, that's kind of the prelude to us, and now I'm going to use HighGold kind of as a case study where I think we check all of those boxes. You know, just looking at capitalization structure, we've got a tight share structure with just 33 million shares outstanding. We've got a lot of cash in the bank. As of the beginning of this month, we had 12 million in the till. Our market cap's hovering around 50 million right now. A really well-balanced and really high-quality investor list. And this is, you know, as an investor, this is your way of looking to see what the endorsement is of us. You know, who else is investing in the company that gives you confidence that there's smart money coming into the company. We've got some top blue chip institutions: Franklin, Dynamic, Century, Sprott Fund, that's a Rick Rule fund. We've got big name mining personalities with Rob McEwen, John Robbins, and others. Great retail support, and we also have the endorsement of a senior gold producer, one of the top 3 North American gold producers, invested in HighGold in our when we formed, and they've continued to participate along the way, and they currently control 9.9% of the company. If you want independent research or an independent take on what we're doing and the quality of our assets, we do have research coverage from 2 analysts with Stifel and Cormark. You know, their price targets are certainly fairly lofty right now. They have us at $2.50 to $3. And newsletter coverage, we've got great support there. As you can see, the list of support we've got. You know, as Naomi introduced, you know, I'm a technical guy. We actually really do pride ourselves on our technical strength. We're in a business where you need geologic smarts to find ore deposits, and that's what we do. We've got a lot of history and experience in that. We've got some good discoveries to our name. Collectively, my senior VP Exploration, Ian Cunningham Dunlop, his biggest win was with Frontier and the Long Canyon discovery. It was a takeover for $2.3 billion. More recently, we added Devin Denboer as our VP Operations. He comes from 25 years of international experience with Kinross globally, and a great supportive and diverse board that really gives, I think, me a lot of support in what I do, as well as a technical advisory team that we can tap into when needed. Some top-notch guys there. So where we are, you know, our flagship asset is Johnson Tract in Alaska. It's a very accessible part of Alaska. We have defined a plus 1 million ounce gold equivalent deposit there that's very high grade. It's one of the higher grade undeveloped gold deposits in North America right now. It is polymetallic, and what that means is not only does it have gold, it has copper and zinc and a little bit of lead and silver. You know, the grades here, we've kind of got the best of both worlds. You could take out the gold and you'd have a high-grade base metal deposit, or you could take away the base metals and you'd have a high-grade gold deposit. It's very unique in that respect. In addition to Johnson Tract, we have a very large portfolio of property in Timmins. This presentation is primarily focused on Alaska. I will touch on Timmins in the end, as well as we recently announced that we have some projects in the Yukon, very near Snowline Gold's projects. So, you know, we called ourselves HighGold for a reason, because we're focused on high-grade gold. Our ticker symbol is HIGH, so when I talk about HIGH throughout this, there's a reason. And it's not just me saying it. This is just a list, a compilation of an Australian company that compiles the year's best drill intersections globally. We've made that list, or been on it, or very nearly on it the past 3 years. We hope to be on it again this year. Last year, we made number 3 on this list. So just putting it in perspective, we've drilled some really, truly outstanding drill intersections that's translated into a really nice mineral deposit, and we're focused on growing those. So getting in a little closer to where we are, this is a very ice-free part of Alaska, Cook Inlet, Anchorage to the north here. We have an airstrip. It's about a 40-minute flight from Anchorage itself. Communities of Kenai and Homer and Inilchik close at hand that provide a workforce that supported the oil and gas in Cook Inlet, but also a workforce that can support us here. Great location. Particularly for a project that would ultimately produce concentrates. You want to be close to tidewater because concentrates mostly get sold to Asian markets, Japan, Korea, China. Zooming in a little bit closer here, this is sort of a satellite image draped on topography. The property does have road and port easement access, so that was something, it doesn't have that easement rights. It doesn't actually have that road now. But it's an important piece of the project. It gives us some confidence in terms of being able to develop the asset in the future. To highlight here, this is where the main deposit sits and where our camp sits. Not only do we have a very nice deposit growing, we've got a second deposit in the making here at what we refer to as our new Ellis zone. And so I'll spend a bit of time today talking about that because that's one of our latest developments that's emerging. So for us, our business plan is really quite simple. We're focused on sort of what we think is the ideal mine or mineral deposit. And what I mean when I say that, we have this very rare combination of both high grade and attractive widths. It's a very, very thick deposit. That's rare to get. And why that's good is because it generally lends itself to much lower mining costs and higher margin type operations. It would be a high grade underground type mine. Those are generally more straightforward and simple to permit. They're generally smaller CapEx, so easier projects to build. And it's a project that has strategic energy metals. That's an advantage in this day and age in terms of getting political support. We are leasing this project from a native corporation. So Alaska settled its land claims, native land claims, about 50 years ago. It was a very progressive model, and it really makes the state a very attractive place to explore and work. And from the standpoint of actually developing the asset here, you would see the local indigenous people get direct economic benefit from the development of the project. And that generally relates to broader permitting and political support for your project. So our game plan really is to build value with the drill bit, and we've been doing just that. We've been growing a deposit. We had about a 500,000 ounce deposit when we acquired this asset. We're now up over 1 million ounces and growing, and we also have a second deposit in the making. We don't have a resource on that yet, but it's showing every indication of becoming another second significant deposit, and we plan to continue doing that. But now that we have an updated resource, this summer we came out with an updated resource at better than 1 million ounces, and we're at a stage now where we can start really looking ahead a bit more at the engineering and environmental work and looking at a path forwards for economic studies and ultimately seeing if it's a feasible project. So just looking at that deposit itself, this is a long section highlighting how the deposit sits, and the real takeaways here are we were able to increase it by 40%. The lion's share of this deposit is in the higher confidence indicated category, so we have very high confidence in this resource. But if there's one thing to remember, it's this thickness. We're just under 10 grams, but we're about 10 times thicker than your average 10-gram system. It's an incredibly thick deposit, and it's subvertical dipping. Those are very attractive features from a mineability standpoint. It is open to expansion. We're continuing to drill here this summer, as well as drilling other prospects on the property. And one other thing to highlight, we actually launched a big metallurgical program earlier this year, which we got the results back for. In any deposit, metallurgy is key. It's basically how easy can you get the metal out of the rock. And it's particularly important when you have a polymetallic deposit. And the I guess to sum it up in short, we have excellent metallurgy. It's coarse-grained, it produces high recovery through conventional metallurgical processes, and very desirable concentrates. So, carrying on with the theme of mineability, as I say, we haven't done an economic study on this yet. We're just at the stage where we're thinking to do this. But conceptually, we can look at the project and the deposit, and there's a lot to like. Because of the terrain here and where the deposit sits, geographically, in the mountain, you can actually access it with lateral development, i.e. drift in laterally. That's a lot lower cost than sinking a shaft, and you can mine from the bottom up. Because it's subvertically dipping, you could actually put an ore pass in and use gravity as your friend when you're mining. Drop it down, pull it out at the bottom. These are all things that ultimately, reduce your cost as a miner and make it more attractive to develop. So, switching gears here a little bit, so that's the deposit we have. It's growing. We're advancing the engineering studies, looking to sort of raw exploration side of things. Last season, at the end of the year, we drilled an absolutely outstanding drill hole. It was 6.5 meters, excuse me, of over 500 grams per ton gold. We didn't get those results back till the end of the season, so we weren't able to follow up. So one of our core objectives as we started this year's drill program was to see if that had any legs to it. Was it a deposit in the making? And so this year, we started with both rigs there, and we stepped out. We completed 25 initial holes. We now have, I think, close to 40 holes on that. We've only released 14 drill holes to date from that drilling, but we're extremely pleased with those results. And just to highlight this area of drilling, here was that initial discovery area. We've stepped out, continued to step out. These blue traces are ones for which we're waiting on the assay results still, but everything we've stepped out on has hit mineralization to date. And this is just a long section. I'll go back here. So for those a little less familiar with the mining space, this is a plan view map looking down, and we've basically taken where we've intersected mineralization and denoted it as a dot, basically simplified it. Long section is vertical cut through the earth like this, and this is that projection. So this is how those dots sit vertically. So we've been able to extend it down at depth about 100 meters. We've actually extended it further than that now with our drilling. And from here, a little bit close to 100 meters east-west. Again, we've actually expanded that further with our ongoing drilling. And the real takeaway here is we're getting fantastic grades. These are color-coded to grade times width. So you take the gold equivalent grade in grams, you multiply it times the length of the intersection. That gives you a number. It's a way of kind of simplifying what's a good hole and what's a so-so hole. Intersection that's over 100 gram meters is considered a very, very good intersection. There's not a lot of deposits that generate them consistently. We now have 7 of those with the holes that we've drilled to date. Some very, very strong mineralization. We're not seeing 500 grams in every hole. You're not going to see that. But we are getting up to, plus 20 grams over 12 meters, 35 meters of 6.7, some sub-intervals here that are quite high in these other holes. So very pleased with this. It's very early days, but it's showing every indication of growing into a significant deposit, and that's very important, big picture for the property, because when we approached this property, we felt there was good opportunity to find other deposits, not just one deposit, and that one deposit having growth potential, but the possibility to basically find multiple deposits, and you would expect it with the type of geology we have. And what we're seeing here is the evidence for that already. Yet to be determined how big it will be. You'll only know that with more drilling, but it's a great start. And we particularly like it because it's so similar to our main deposit. And our main deposit is very unique geologically. And so the fact that we're seeing this 4 kilometers away from our main deposit bodes well for finding more of these on the property. So, carrying on here a little bit, or really just summarizing the key takeaways for Johnson Tract. It's this rare combination of grade and thickness. It does separate us from the pack in a very big way, in our opinion. We are not remote. We're close to the coast. This is a project that should be very developable. From a mineability standpoint, it is what we like to call an engineer's dream. It's just laid out geometrically in the right way. And we think there's opportunity for scale here. Getting over 1 million ounces gold equivalent was important sort of psychological threshold. We think that's just the beginning, and there's a lot more growth here. And you know, finding a deposit that looks great is one thing. Being able to actually develop it into a mine is another. That's why, in our view, ESG is so important, the environmental, social governance aspects. And the fact that we're doing this really together with CIRI, which is Cook Inlet Region Inc., it's the native corporation that owns the lands, is a very feel-good aspect to the project. And we think certainly enhances our ability to basically get this through to production. So that's Johnson. You know, I'll touch briefly now on Timmins. You know, as a company, we offer, I think, shareholders optionality, exposure to multiple things, kind of all under one roof. You know, this portfolio here of properties, the gold are the ones that are controlled by HighGold. You can make really a standalone company with these assets alone, but you get both with one company here. You know, if you did a targeting exercise and said, well, Canada's a great place to be, and it is a great place to be from a mining standpoint. You know, the big senior gold producers want to be in North America and Canada in particular. And you said, where are the best gold deposits in Canada? You know, Ontario would really pop as one of those areas. Bear down a little more, you go the Abitibi, bear down a little deeper, the Timmins camp. It's numero uno. It's the best place. It's produced more gold than anywhere else in Canada, hands down. And so if you want to look for another deposit, our view, that's a good place to be looking. And so we came here with the strategic approach of let's look for areas that have good geological real estate, they've got good fundamentals geologically, but have been grossly underexplored. And that's what this sort of portfolio represents. Some areas are underexplored for different reasons. For example, we have a property out here called Munro Croesus. Those big flashy gold samples you saw on our cover slides, those come from that property. But it was a very small land package, and it was a patchwork of different landowners that dated back over 100 years from when that was originally mined. So we've done 15 separate deals over the past 2 years, tracking down old family estates to track down these old patented mining claim owners, and we've consolidated that. And why that's significant is it's allowed it now to be explored. When you have a patchwork of small little pieces, you don't work the land. You don't have enough land to work it. So that's the storyline there. We are surrounded by multi-million ounce deposits. Moneta Porcupine has 12 million ounces here. Fen Gibbs 2 or 3 million ounces. There's a lot of gold around here. It's a good place to be looking. Golden Mile is a similar kind of deal. We've got great geological fundamentals. I'll heed Naomi's warning in terms of not going into too much geological detail, but come ask me afterwards why we really like that. But it's shocking how few drill holes there's been drilled into this area, given you're looking down on what is arguably the most ounces anywhere in Canada. And just, you know, to touch on Yukon here as well, these are assets we actually always had from formation. You know, we've been a company that got listed 3 years ago. We never ever talked about them because they weren't that relevant to the company at the time. What's happened in the last 12 months is a company called Snowline Gold made a very significant discovery up here called the Valley Discovery. And I'm just trying to find that right balance of geological detail. But basically the type of deposit they found is traditionally been known to have much lower grade than what they're finding. So they've found these intrusive related gold systems that used to be a half gram to a gram, which are always very challenging in these more remote areas. Well, what they've done is they've showed that those types of deposits can be much higher grade. They're sort of hitting 2 to 3 gram material over 100, 200, 300 meter wide intersections. And what that's done is it's actually changed our thinking on this area because we have those exact same type of targets. These were explored 10 years ago. We found great big gold and soil anomalies, just like Scott Berdahl and crew with Snowline we're finding up here, that have yet to be drilled. So we have yet to determine what we're going to do with these, but it's just another asset within the portfolio that we're now looking to daylight value on one way or another. So I guess just to summarize things, you know, why high and why now? You know, we think our value in the company is backstopped by a very high quality, high grade resource. You know, not all ounces are created equal. If there's one thing to kind of leave this room with, it's like you really have to understand those assets. And we think we have one of the better quality resources out there. We're fully funded to kind of create that step change value creation, you know, make those discoveries and to advance the project itself. We're doing that right now with drilling. We're just wrapping up a better than 10,000 meter program in Alaska that's been focused on both growing the main resource and the real significant thing this year is this definition and discovery and starting to define a second deposit at what we call the Ellis zone at the Difficult Creek prospect. And you know, if you're just going to talk straight value, you know, we've raised $46 million over the last 3 years of financings since we went public. Those are all good quality investors that came in on those financings. The average price of those is $1.63. All we've done since then is add value to the asset. We've doubled the size of the resource. We've found a second deposit. We're now trading at about 67 cents. So I don't think you can get better value than that right now. So that's my presentation today. You know, Naomi and myself will be around the floor, but certainly open it up for questions. Yeah, Hod Maden in Turkey is the best comparable. Yeah, it was Neil Adsett, who's a very well-respected kind of stock picker, who pointed that out to us early on when we went public. And it is. I've met with those folks, and it's this odd hybrid between what we call a VMS and an epithermal. And it's the feature we like about the VMS is they cluster. If you find one, you often find more. But it's got the grade of a gold grade that you get with an epithermal. Right. Right. Yeah, no, it's a good question. I mean, we've very much taken a dual track approach. You know, and this summer we actually, you know, the hiring of Devin, who's our VP operations, was specifically to look at that side of the equation. What's it going to take to get to feasibility and mine decision? Those are always very challenging things to do when you're an explorer and you continue to change the makeup of the project. We said to ourselves at the beginning of this program, you know, do we do a PEA or not on the back of this resource? Well, let's see how the drilling plays out, because if we find something significant at one of the other prospects, then it's showing that it's a second deposit. Does it make sense to start crunching numbers right away? So now we've found something significant, so we have to think pretty hard. But we're doing all the things in the background. You know, we've done the baseline work. We had engineers out there looking at roads. We're looking at what it would take to get underground, because there's a very logical progression in this project to get a road in, get underground, which you would use actually as an exploration platform to continue to upgrade your resource for the level you'd need for full feasibility study. And then you'd actually have infrastructure that allows you to transition to mining very quickly. One of the kind of aspects here that I think is very counterintuitive to people is we actually think this is going to be one of the easier projects to permit within North America and the US, which sounds odd given that we're actually surrounded by a park. But we are on native corporation lands, and those native, you know, just for background, for everyone's benefit, that park was partially created due to the goodwill of the native corps that gave up some of their land selections to allow it to be created. But permitting in the US all comes down to land status, and when it's private, and you have a small footprint project that doesn't require federal permits. I'm hoping that's two fingers and not the Australian salute. That's or 2 minutes. So yeah, to your point, I can't give you a timeline, but I do think it's, and you can look at something like Contango, Rick Van Nieuwenhuis's company, where you get these projects that are on private, very analogous. That's private native corp owned land. They started permitting in December of last year. They plan to be in production basically in 2 years' time from that. So it's a project that can achieve that quicker, but I'm not going to tell you today what that timeline is. Exactly. Yeah. Yes?
What's the biggest hurdle you need to overcome in the next year or so?
Good question. You know, I just see small hurdles in a way. There's kind of no kind of like, really, I think what we need to do, I think for the market from a valuation standpoint, the market just often does a very basic analysis of ounces. They go, well, 1 million ounces, $25 an ounce, and you should be this price. But you know, I keep harping on this theme, not all ounces are created equal. You know, if you've got something that's high margin, i.e., you know, if one company might have 2 million ounces where their margin is $400 an ounce, you can have 1 million ounces where your margin's $1,000 an ounce. What are you going to take? You're going to take the million ounces, right? And so I don't think the market fully gets that aspect of our project, and I can't, you know, we're limited in terms of what we can say until you actually produce economic studies that make that clear. But that's, to me, the biggest objective, is to get the market to understand what we think is the tremendous sort of margin opportunity with this. And it's clear we're doing that at the same time as establishing scale. If you asked me at the beginning of this season, I would have said to show that there was a second deposit on the property. We're now showing that. I don't know yet how big it's going to be. You know, you're only going to know that with more drilling. But it sure is showing great signs to date. It's tied into a great big alteration system. We know there's others out there. So, you know, I guess that's my answer to you. Well, thanks again, everyone. I mean, if anyone wants.